Hello there, and welcome to the inaugural Kluge Wealth Advisory Group monthly client update video. Before we get started on today's content, I want to share a little bit of background about these videos and why we're producing them. The bottom line is we want to produce these videos to use every tool we have available to communicate with you and to supplement our regular communications that are personal, as well as through our newsletters and other means. What you can expect in these videos is that we will cover a variety of topics that are both regular segments and rotating segments, and over time I anticipate bringing in guests and other speakers. In addition, you will be able to find this video on our YouTube, X, as well as on our website, so it should be freely available and able on a number of medias. Today we're going to cover a few topics. In wealth planning, we're going to talk about the role of corporate executors. We're going to cover a number of frequently asked questions, especially about US elections, as well as we're going to do a market recap of July and talk to you about any portfolio changes that we had made during the month. Before we get into any of that though, I did want to take a moment just to acknowledge the fact that as the Kluge Wealth Advisory Group continues to grow, I've wanted to ensure that all of the professionals working with you are continuing to grow in their roles as well. In the coming months, you're going to notice Kyle Foyer's title moving from Associate Wealth Advisor to Investment Advisor as he takes more responsibility for communication and advice with certain clients. You're going to see that Jordan is going to start to undergo training to step into Kyle's role, and you're going to notice that Scarlett is starting to learn the ropes in being a financial planner. So as we continue to grow and develop, we want to make sure that the great people we have working with us are growing and developing as well. Over the course of the last few weeks, we've been working with a number of households to help them to review their estate plan, including their wills, powers of attorney, and healthcare directives. And one question that's come up a number of times is, what is the role of a corporate executor? What can they do and where can you find one? So very simply put, a corporate executor is a trust professional that can be located either at a trust company of a bank or an independent firm that helps carry out your wishes. A great estate lawyer I once knew said, if you have a will, you have a say. And the corporate executor's role is to, on a professional basis, make sure that your voice is heard. They will secure your assets, make sure all the tax filings are done correctly, and make sure that the assets are distributed and administrated as per your wishes. Now, as I mentioned, these professionals can be found either at the trust company of major banks, credit unions, or working at independent firms. And one of the key things that they can do is actually work with another executor. Now, a non-professional executor may have time constraints surrounding family, work commitments, or just financial knowledge and capacity. And this is where it can be a great team to have a professional executor and a personal representative both working together. Because the personal representative will understand who you are and make sure your wishes are carried out in a way that you would have liked. And the corporate executor makes sure that all the legal things happen and that your estate is processed and distributed as smoothly and efficiently as possible. So of course, I realize that this is a brief introduction, but if you have any further questions or looking for more information either on discussing estate or will or power of attorney planning or a corporate executor, please reach out. It would be great to hear from you. Moving on from our discussion about corporate executors and the role that they play, let's touch on a market update for July, as well as talk about some of the frequently asked questions that we encountered in our conversations. In July, we had a very interesting market, and it reversed a lot of the trends that we had seen really over the last 12 months. Canada outperformed the United States, international outperformed the United States, and within the US, the S&P 500 outperformed the NASDAQ. Now, this type of reversal is very normal, and given the fact how far some of these technology stocks had come over the course of the last year, we should expect that there's going to be some pause while they become refreshed and the other rest of the market catches up to them. In speaking with our chief market strategist, Dr. James Thorne, I believe that this is a very healthy development and it'll allow the market to actually move higher from here because there will be broader participation. Now, in terms of other parts of the market, we also saw interest rates fall due to softening inflation data, which helped move bond prices up. And we also saw commodity prices fall, but not too much, just enough to reduce the chances of inflation re-emerging and to keep the economy on track. Now that we've covered off our July monthly market recap, I wanted to get into some of the frequently asked questions that we saw from clients over the course of the month. So I think it would be no surprise to start off by saying that the most frequently asked question was just about the US election and potential impact on markets. So in looking at this, the bottom line is that, based on research from the Stock Traders Almanac, which is a firm that specializes in, studying U.S. election cycles and how they impact markets, the U.S. presidential election year is usually positive but volatile. And I would say that's exactly what we've seen so far. We had a great start to the year through Q1. April was a pullback, another run up into mid-July, and now a bit of a pullback into the end of July. So it looks like things are adhering to the usual pattern, and if that continues, then we would expect further volatility here this month into August and September and October, and then we would expect a very strong rally to finish the year off. And that's the way the election usually work out. Who wins is much less important than the fact that there is certainty on who will be the winner. So the extent of the volatility is really going to depend on the confidence the market has in who is going to win. Now, each party will likely benefit different sides. It's pretty clear that at this point that a Trump victory would probably be positive for more domestically focused U.S. equities, such as small caps, as well as for crypto, and would be negative for the energy space because he would be assumed to be more pro-drilling. A high-risk victory is less clear at this point because there is not, as I'm making this video, not a published platform. But it is presumed that based on current administration policy that it would be less friendly to the crypto space and less friendly to drilling, which would ironically probably be better for energy producers, and also probably continue to follow green policy. So green industries would continue to benefit. Now, another frequent question we had was about Bitcoin and the crypto markets and how that trade is proceeding and how that part of the market is working. So I would say that we are right now in a crypto bull market. Bitcoin itself has appreciated substantially since this time last year, and given some of that substantial appreciation, Bitcoin has taken a bit of a breather. That's very normal. If you look at research from Fundstrat, Tom Lee, of course, being one of the more famous strategists there, you'll see that most of the returns in Bitcoin happen on a very small number of days, and that for a significant part of the time, Bitcoin trades in a very large trading range, sometimes 20 or 30% around an average. So it definitely is something you have to have some risk tolerance for. You have to have a long-term view. And you have to be patient because typically, most of the return happens only 10% of the days. So if this cycle continues normally, we would expect to see further appreciation later this year, and then very, very fast appreciation, coming into the middle part of next year. Now that all remains to be seen, and I'm just speaking, pattern is not prediction, but right now everything looks to be on track. Another frequent question that we've seen is in terms of what the medium-term outlook is. I know from perusing financial media and looking on the usual Twitter sources that there's a lot of anxiety there about a bear market or a market crash or a recession. So what I'd like to start out by saying is that the fact is that a lot of the churn we've seen in the markets that I discussed in the previous section is actually very, very healthy. And the fact that the laggard stocks are starting to catch up to the leading stocks it's almost like a spring that's coiling up for another expansion. And you can see that in the quantitative data. There's been patterns in the price, patterns and volume that would indicate substantial returns, especially to US equities as we look out over the next 12 months. Now that also works with several other, what I would say, coincident indicators. Markets are typically positive during the Bitcoin halving cycle, and that doesn't end until next August. And the year after a US election is also typically positive, as pointed out by the Stock Traders Almanac. In addition, I would point out from a more fundamental basis that Fundstrat and the chief strategist Tom Lee there does point out that the US economy, although it is slowing slowly. And so it's going to take some time, especially with the large fiscal spend in the US, which is helping to propel the government sector forward. It's going to take a long time for the US economy to slow down to a point in which recession is a real risk. So when we take a look at all the factors, whether they're fundamental, whether they're quantitative, or whether it's, it just comes down to assessing sentiment, I think the medium-term outlook here looks pretty good as we look through the next 12 months. As we look further out into 2026, again, it's, things get cloudy. That's 18 months away. What we can say is that if we just look at the US presidential election cycle, which is again updated by Stock Traders Almanac, that would indicate that midterm election years are typically a week, but that's not a guarantee. We can point out plenty of exceptions, and that's something we're going to have to assess as we get closer to the mark. So for now, I think everything looks good. I think that we're allocated the way we want to be, and I think that we are experiencing normal seasonal volatility, just enhanced by the fact that it is a US election year, and there is some new uncertainty put into the market with Joe Biden stepping out of the race and Kamala Harris stepping in. So in terms of the portfolio, as you may have guessed, we're not going to be making any major structural changes to the portfolio. When we look out 6, 9, or 12 months, what we see is decreasing interest rates, decreasing inflation, and continued moderate economic growth. And that formula should be very positive for the stocks that we already own. Now, at the margin, we did raise some cash in June just because the markets were very, very hot, and we did want to take a little bit of profit. With the broadening out of the markets into different sectors, we are going to add a little bit of other exposure by buying some value factor ETFs just to add some diversification and taking advantage of this broadening out trade. So if you have any questions on this, or of course anything else with the portfolio or anything that you see, please give me a call. We're here to help. In conclusion from this month's call, we touched on the role of an executor in the wealth planning process, a team update. We touched on the very interesting market activity in July and touched on some frequently asked questions with a lot of emphasis on the US presidential election cycle and the medium-term outlook. Now, if you have any questions on this or anything else in your financial life, please give us a call. We're here to help, and we'd love to hear from you. Thank you very much.